My name is Marissa Trew, and I am joined today by Michael Dunn, president of Bitnomial Exchange and chief commercial officer of Bitnomial, and Solomon Tesfaye, chief business officer of Aptos Labs. And we're actually kicking off today's conversation with some pretty big news, the first ever US regulated APT futures on Bitnomial Exchange. So, Michael, what can you actually tell us about this?
This is the first time that APTs can be listed in the United States under a CFTC registered DCM, which is just a futures exchange, clearing in the United States, which is a huge milestone, I think, for the Aptos ecosystem. And I think that, I think it's going to bring a lot of institutional readiness, infrastructure, and a regulated capacity for Aptos to plant its flag in the United States and kind of expand its product offering and what it can do.
So, in the broader scheme of things, why is this such a big deal or such a major signal to institutions?
What people need to think about is that the United States is kind of a special regulatory regime. There's a couple asymmetries about it that make it unique versus the rest of the world. So, for example, just to kind of educate some people on derivatives trading in the United States, U.S. citizens have a special restriction on trading derivatives outside of the United States. And this includes institutions, retail participants, banks, what have you. So what they have to do is they have to go and trade those products on offshore registered exchanges, which are pretty rare. There's some European ones, some very few in kind of Asia and the Middle East, but mostly they have all of their in trading in the United States. Now, for people offshore globally, they can trade U.S. derivatives, which is a superpower, if you will, to be in the U.S. regulatory regime, because it really gives you global market outreach with only being in one jurisdiction. So I think that's what's really powerful here. And I think that, kind of going forward, as we see the regulatory regime and the comfort of institutions coming into the digital asset space, we're talking publicly traded companies such as DATs, banks, institutions that want to do lending and financing for these products, they have to have their business in a known regulatory regime. There's no better regulatory regime than the United States. And so I think as we kind of grow and mature more, you can't just have trades and balance sheets with offshore exchange that are unregulated. Has to be regulated, has to be here. And I think this is a really good milestone for that and for the ecosystem to kind of explode.
So it's partly to do with global participation and making sure that everyone's broadly aligned on the way this will operate, but also basically ensuring that the US is up to speed with the rest of the global markets and their take on digital assets.
Yeah, that's right. It's kind of interesting is that the U.S. lagged for a long time in the digital asset space. Obviously, we saw people set up offshore entities and kind of put a lot of their liquidity and volume through there. And then in this administration and regulatory environment, I feel like we kind of leapfrogged. And now we're ahead of the game. And I think what we're working on here with Aptos is kind of a symptom of that. We're seeing that, hey, this is the place to be in the United States. It gives you a lot of power and capacity being in a regulated market. And it's here to stay, and we're moving forward at a very quick pace.
So then looking at it on an asset level, Solomon, what does this milestone actually represent for Aptos and the digital asset market at large?
So just to build on what Michael said, when you think of the U.S. regulated futures market, it operates within strict rules, whether it be market surveillance, whether it be transparency and reporting, whether it be risk management and clearing. Just it indicates that Aptos, APT specifically, has gone through this rigorous due diligence and risk assessment. Also, it makes it much, much more an accessible asset for institutions that want to interact with, whether it be institutional allocators, funds, corporates. It also is a prerequisite for a number of other approvals that I'm sure we'll get into in conversation. But it's a very exciting landmark, especially given our institutional grade focus.
So we've spoken a little bit about the regulatory side, but what about the actual demand for digital asset exposure? Are these riding in tandem, or are we thinking that regulation is going to prompt that demand or catalyze it further?
The demand is very high. And I think being in the regulated space, like Solomon was saying, with regulatory compliance, surveillance, it's very critical that the users of this ecosystem that want to take these risks are in this environment. And I think the demand is reflecting that the fact that they want to be here. And I think it's a virtuous cycle where if you have a good foundation for them to exist in and to operate in, it builds trust and kind of feeds upon itself. I think I think that that's an exciting development. And I think that Aptos is taking advantage of kind of being a first mover here, in my opinion, on setting themselves up for success.
And the reality is a lot of capital deployment can't even happen. A lot of institutions can't interact with certain asset classes unless they have this type of line of sight, unless they have these regulated venues in which they can interact with. And so it really is a capital formation play by all means as well for different institutions to be able to deploy capital. And that's where the bulk of the capital is in all reality. And so we definitely want to create that connectivity and be able to give those investors line of sight and exposure to the Aptos ecosystem.
Bitnomial is not necessarily a new player in the space. It's been live in trading with digital asset derivatives since 2021. As outlined by its crypto complex, what makes Aptos and Bitnomial uniquely compatible from your point of view, and what actually puts it ahead of the pack from this regulatory standpoint?
Yeah, I think that's a great question. I think there's a couple points. One is that I think the platform itself lends itself to speed and performance being, a very important layer one. Obviously, we support layer twos and things like that, but the layer ones are kind of what has been our main focus. Why is because that allows the users and the ecosystem to kind of build on top of a strong foundation. Look, I think if you don't have ways to manage risk, get exposure to the underlying asset that's used, for, gas fees, anything, what have you, you can't really build decentralized applications very easily. There's a lot of risk involved with that. And so I think that as the institutions kind of get in here, they can help, solve those problems. They're basically side effect risks of building an ecosystem, and they need to be able to manage that to scale the applications properly. And I think that's what we're here, and I think that's why this makes sense.
Solomon, to flip the question round, why was Bitnomial sort of the optimal partner to look at this APT futures opportunity and seize it?
Binomials continue to show that they're a very innovative player in the space. They continue to push the boundaries. They proactively were engaging in conversations with us regarding our aspirations around creating more crypto APT linked products, traditional products. They knew that we had ambitions given our traction in Europe regarding ETPs, exchange traded products, and we have several APT exchange traded products in Europe. They knew that we were actively pursuing our partner Bitwise, an Aptos ETF as well. And then it was just a very natural conversation to have. And they're very well respected in the industry. And so we thought our brands were also very complementary by all means. And we're looking to forward to really leaning into the relationship a lot more so.
And when we're talking about, access to US regulated APT futures, how does that actually work to enhance the credibility of the Aptos ecosystem and essentially help support its longer term development?
I think one of the main benefits of being in the U.S. regulated space is like Solomon was saying, is the kind of line of sight and visibility into the markets. What we're seeing right now, let's all kind of remember what happened. What was it, October 10th, right? There's still a lot of uncertainty about what's going on there. There's questions that are basically unanswered at this point in time. And there's a lot of speculation that there's some issues offshore. We don't know. I think time will tell what happened. The difference with the United States markets is that there's a level of visibility with the regulation to understand what's going on to enhance market stability. So one of the key points is that Bitnomial has actually recently joined the Intermarket Surveillance Group, which is a kind of industry exchange, global exchange-wide information sharing group, which basically means that when you're a part of the group, we can ask each other, hey, can you give us some information about the participants in your market? Can you give me some of your market data? Can you give me some of the activity that you've seen? And it creates this ecosystem to kind of understand from the exchange perspective about what's happening globally with all the exchanges. This doesn't happen with the offshore exchanges. This doesn't happen with the other kind of maybe like, OTC market. So when we have that type of visibility, it gives a lot of confidence to the players in the system that, things are working as they should be and the risks are contained and that things are going to be able to be smooth going forward. Because I think without those certainties, I think people can't build and scale as they wish.
Also, when you think of the APT futures at Aptos, we're trying to take a thoughtful approach around which products and which partners we're actually working with to bring these products to light. In September of last year, the SEC actually put out a generic listing standard for ETF approvals, as opposed to approving them on a case-by-case basis for crypto-linked ETFs. They noted that futures is one path. Having futures in the market is one path, and which should act as a catalyst for you getting approval. So as we think about how all these different products are complementary to our overall APT roadmap, if through different partners like Bitnomial, Really, we view this as very, very complementary to get one, capital formation exposure to APT as a whole, but then two, drive institutional interest in our ecosystem in which they can interact with. We're all already building with BlackRock, Franklin Templeton, Hamilton Lane, a number of other institutions globally heavily involved in the Hong Kong dollar with the Hong Kong Monetary Authority. So we have global institutional efforts and having these different types of products, institutional products that allow the buy side to also gain exposure to the Aptos ecosystem is complementary in a number of different ways.
What's really great about that is that as we kind of move forward with obviously the regulated listings that we have here, what's really nice about having a futures market and ultimately perps options as we kind of build out the ecosystem, having the ETF portion really drives liquidity and arbitrage opportunities for market makers, which I think is again another virtuous cycle that really helps build liquidity and demand and stability in the market. And I think Aptos is basically doing a two-prong approach here, which I agree with, and I think that's it's a long-standing tradition in kind of the commodities and securities market. Look no further than like the S&P 500 with the ETFs there we have in the securities land, and then obviously with the S&P 500 future on CME. That type of liquidity and driving in those two areas really helps stabilize an ecosystem.
We're also sending a lot of signals as to what the crypto financial product looks like in a more traditional framework. And I guess the embedding of these digital assets into a system we sort of already know, but is evolving in real time. What does this mean for potentially retail investors who are looking at their first foray into digital assets beyond just the institutional play?
I think the retail investors are the ones who we should think about very carefully because typically they have been the ones that in unregulated markets are typically the first ones to take hits. What we're doing right now is building kind of consolidated liquidity among the institutional and retail players. Traditionally, US commodity markets work that way. I mean, they've worked that way for over 100 years. There's nothing different, in our opinion, at Bitnomial, why digital assets aren't just traditional commodities and we should treat them as such and they should get the same treatment. We should expand the ecosystem just like gold, silver, oil, corn, wheat, what have you. It should act the same. Now, there actually, in our opinion, there is some benefit here with digital assets that their ability to verify, obviously via the blockchains that they operate on, and the ability to move them quickly. So what's really great is that, like, for example, if you take wheat on your exchange, wheat's hard to move around. You got to put it in a grain silo. Who guarantees that the wheat is actually the grade that needs for delivery? With blockchains, especially like Aptos, we can actually go and facilitate physical settlement very easily, which actually means that you can build better financial tools on top of it. Like, for example, people need to get into financing of maybe lending, for example. Lenders are going to be able to take that asset, do the hedging on the exchange, and then that allows them to kind of get in and out of that quickly, which ultimately drives down rates and improves liquidity. So I think that's a massive advantage.
And just to build on that, when you think of just access to financing and absence of having options to hedge, it makes access to financing extremely difficult. And so there is an expectation, especially from sophisticated investors, that they're going to have these adjacent products in order to hedge properly, and therefore access a larger amount of financing. And then from a product suite perspective, it's very complementary because you've of course been following the trends. Earlier Michael mentioned DATs, and then also of course ETFs and broader ETPs in Europe and elsewhere, as well as a lot of other derivative products that are coming to market. Different investors are able to interact with different product types depending on whether it's the US or elsewhere. And so we want to broaden access as much as possible for both retail as well as institutional purchasers, as well as we want to make sure that if people are looking to do more creative products, whether it be indices and basket-like products, that we also participate in those as well. Because at the end of the day, we want to drive awareness in terms of the growth and access to Aptos ecosystem. But at the same time, we want to also make sure that people are able to actually participate in the upside as the ecosystem continues to grow.
Yeah, I think that's right. And I think maybe, I want to highlight another in the retail portion, is that the retail investors are interesting because there's kind of what we've seen kind of two or maybe three different classes of retail investors where one who do like to hold the underlying token and are sophisticated enough to manage that. And I think that's a big component. Then there's a class that just kind of want the upside, the exposure, the investment in it. And that's where the kind of bit comes into play and making sure that the ETFs and the actual people holding the sure that those are connected as possible, such that they grow together and there isn't sort of these weird opportunities where people are getting a worse price and things like that. So from a market structure perspective, it's important to have both assets.
And I want to really underline one point that Michael mentioned. Definitely not naive to the point that a lot of retail still at this point are used to interacting through their brokerage account. They're used to having a certain UX UI experience, and therefore you need to make sure that the products are accessible. From Aptos perspective, we believe everything is going to be on change, similar to the transition from paper trading to electronic trading when Nasdaq introduced that. We believe this is just an evolution in technology, and all these products are eventually going to become on chain. But we also understand, just from a user experience perspective, we're trying to make sure that we come to the investor in any of these capacities.
Going back a couple steps and speaking on the points of physical settlement, we've spoken about the intrinsic value of the asset as a result of it being physically settled in that asset. But what else does it actually indicate about it that investors should actually pay attention to?
Yeah, this goes back to my point of just growing out of the speculation phase. We're kind of past that point, and for people to actually build applications and just build more infrastructure around an underlying, you have to be able to deal with the underlying. So physical settlement's a huge part of our business and what we do here at Bitnomial. It's kind of something that we've stuck to our guns for a long time, even though maybe it was unpopular for some points in time. We're the only ones that are doing physical settlement in the United States right now. Everyone else is doing cash settle. Well, why? Well, because it's hard. I think the regulators need to get comfortable about how we manage that process. Ultimately, our brokers, our FCMs that stand in between the trades between end customers and the exchange, they have to get comfortable understanding these risks. And so we've done a really good job of making everyone comfortable, modifying our exchange rules to allow for the flexibility that all of our customers need in order to participate in this type of thing. That's where a lot of our work has gone. And at the end of the day, if you're running an application, you are an investor that's maybe doing financing with apt or things like this, cash settled hedges doesn't get you what you need. Take, for example, of a situation where you are running an asset-backed loan, right? So you're maybe doing like a 50% LTV, maybe you're custodying a certain amount of apt, your customer defaults. Well, if you hedge with a cash settled contract, you have price risk that's managed, but then you have an asset that you have to get rid of. Like you have to go and do a separate trade from that. And your counterparties might know this. And so they might get a bad price. If, however, you hedge with a physically settled contract, you just take it to delivery and the assets off your books, you get the cash and things are easy. So you can kind of see here that those types of frictions at scale they'll have a hard time managing those risks.
So when the frictions are dealt with and we're looking at wider adoption, what's actually going to drive the demand for physical settlement that doesn't currently exist today?
In our opinion, it's going to be the more that people are involved in the ecosystem, building on top of the ecosystem, using Aptos for its core competencies. That's when you need physical settlement. Prior to this, if you just kind of want price exposure, yeah, okay, you can maybe go and buy, some derivative that gets you that. But ultimately, I think we're past that phase, and everyone wants to deal with the asset itself, and that's what's going to drive the demand for physical settlement. If I'm just making make a prediction here, in maybe like 5 to 10 years, I think it would be silly to think that we had anything else.
So we're basically going from this relationship or notion of the speculative trade and cashing out on the trade versus the intrinsic utility of the asset that you're hoping to settle.
Absolutely. Think of it as like oil. Either you are pulling it out of the ground or you're refining it, maybe even when you're shipping it or even when you're using it for production, manufacturing, or you're selling it in a gas station. You have to deal with the underlying. You can't just get the price exposure because there's so many complicated avenues of where that breaks down. And I don't view digital assets operating any differently. They're a commodity. You're going to see potentially 4 or 5 different stops in the supply chain, if you will, as people build applications. And so there's really no difference in to treat it differently, I think is a mistake.
So we're almost looking at it like digital oil.
Yeah, absolutely. Or any other commodity, right?
And Solomon, as we're looking at how Aptos grows its footprint in 2026, what are the regulatory or market structure milestones that you've paid the most attention to or you think are going to be the most pivotal for its growth this year?
more recently, we're looking at amendments to the Clarity Act and paying very close attention to that. So we've had some late nights over the last couple of days focused on that, thanks to our phenomenal legal team and counsel. But then aside from that, this was a big milestone today, so we're very excited about this. And then we also think it's a prerequisite for the ETF. As we all know, Bitwise did file an S1 for an APT ETF. So we're hoping that this really, really helps give us some line of sight to hopefully a 2026 APT ETF. We continue to lean into these regulatory conversations. CEO and co-founder Avery Ching is on the CFTC Digital Asset Market Subcommittee. So we're constantly opining on digital asset market structure. So we're keeping our ear to the ground and sharing our opinion and our views, since we are working with so many counterparties globally. It gives us a unique perspective around what we, at least at this point in time, view as best practice.
Let's take a step back to 2025 for a moment and regulatory progress we saw, particularly in the United States. So we had the Clarity Act, the Genius Act, now we've got the SEC general listing. What is that hopefully paving the road towards this year from a regulatory standpoint? I know everyone's sort of chewing their fingernails and waiting for that next big signal, but what is it that both of you are particularly focused on or excited about happening?
On the regulatory side, obviously the Clarity Act and these other acts are really important, but I think what we have right now and what we've seen, even just from like what the CFTC, and what the previous acting chairman Pham was able to do, we're actually set up pretty well right now. From the exchange perspective, the clearing, we've been able to list new assets that have never been listed before. We've been able to take assets as collateral for margin trading that has never been done ever. We've also been able to launch perpetual futures, which was a concept offshore that didn't exist in the United States. And here we are the first ones to list that. So I think from a regulatory perspective, we're kind of guns a-blazing now, I think, which is really exciting. Obviously, there's more to come, and there's maybe some market structure bills and things like that. But ultimately, I think it gives us the kind of guidance that we need to kind of move full steam ahead, which is really exciting for the industry. So yeah, I think we're in a good spot right now.
I echo those points. I think 2025 was all about regulatory clarity. And now you have players like Bitnomial that are able to conduct their business in a compliant manner within the U.S. And then I think 2026 onward is really about commercialization, bringing this into production. So I'm very, very excited about things like, setting aside trading for a second, stablecoin, which is the connective tissue for everything. It's a common denominator. So I think over the next 12 to 18 months, there's going to be a lot of momentum with clear winners. We're very excited about that because, of course, it plays to the Aptos key characteristics: fastest, lowest cost blockchains. When you think of high volume applications, money movement is one of the most obvious ones. And then bringing more product types on chain. So whether it be historically money market funds and private credit, we're looking, of course, to have equity on chain. We're looking to have other commodity exposure on chain. So that product diversification will start to come on chain. So it should be a big year of real productionizing and commercializing of these different use cases.
Yeah, perfect, Solomon. This is what we've been waiting for years. So I'm
That's
really
right.
excited I'm really excited to be going into 2026.
That's absolutely right.
I mean, be honest, guys, given the events of October 10th, did you see us being in this position this early into the year?
I mean, yes, I think so. Things like October 10th is why we're doing what we're doing. The offshore markets operate, and there's risks with that. There's counterparty risk, there's platform risk. And the problem is that investors and users of those tokens don't have the protections. And I think that's unfortunate that's like kind of a regulatory artifact. But that game has changed. We're moving to the United States. Let's make sure things like October 10th don't happen. And that's what the regulators are here for. That's what our platforms are here for. So yeah, I think it makes sense that we're here.
Even with the fluctuations in markets and so forth, I think that just reinforces the need for what we're bringing to the market today, right? Where it allows for hedging, allows for price stability, price discovery. Venues that are regulated, especially U.S. venues that are regulated, like Bitnomial, create that level of trust and enforce that level of scrutiny when they bring assets and products on board. And then also, of course, the investor protection that comes along with it.
So the broader industry tended to have a very tricky relationship when it came to regulation, but now we seem to be welcoming it with at least one open arm because we recognize that it mitigates a lot of these risks. How are we going to find, this middle road where we're still taking some of the values and what's guided the growth of the crypto industry against some of the constraints that traditional finance has set up? And how do we find that bridge between?
Yeah, that's what we've been working hard on for the past few years. I think ultimately that since we're treating digital assets like traditional commodities, outside of the political headline risk, which I think was a real it adds a lot of friction to the regulators in the past couple of years. I think that mindset has shifted, and we've convinced them to look at things like we would with a traditional commodity. And if you put it in that framework, that's the middle road. But that still doesn't limit its the potential in the ecosystem. I think it's just basically saying, look, guys, this ecosystem is very similar to what we've seen before. Sure, it has a different form, but we're all comfortable with that now. Let's manage it in the same way. And I think when you look at it from that perspective, this is pretty straightforward.
It's very iterative, right? Initially, crypto was viewed as more of a speculative asset. Then, basically, as more and more capital came on chain, traditional players started to want to basically have their products gain access to that capital. And so they started to do now what we call RWAs, previously DSOs, STOs, ICOs, a lot of acronyms over the years, but basically they want to put their traditional products on chain to get access to the capital formation was happening on chain. And then as they dug deeper, they're like, oh, wow, the underlying technology, blockchain, has actually great applications to enhance existing infrastructure. Right now, we're talking more so on the financial services side, but of course, it's broadly applicable. And so now you're starting to see a lot of key players, whether it be DTCC on the clearing side, whether it be NASDAQ, New York Stock Exchange, any of these key financial services players start to say, okay, maybe our back office needs to be revisited, similar to, as I mentioned earlier, with the introduction of electronic trading and so forth. So I think it's just more of an iterative step. And then in between that, you're starting to see, of course, these traditional products are giving exposure from an investment perspective to these underlying assets like APT. Given we're operating primarily in a very regulated space, it's not going to be from 0 to 1 immediately, but it is definitely trending in the right direction. And then with this regulatory clarity that we gained in 2025, the pace in which adoption is happening is much faster.
It's to highlight Solomon's point. I think there has been sort of this mind change in looking at the ecosystem. And so, they used to be very hesitant, but now we're in a situation where, okay, let's treat it like everything else. Oh, and now what that means is that now we can actually take some of the benefits that these digital assets are giving us to these platforms, right? So look, maybe we need to be building new banking applications, new ways to move money, stablecoins. Now let's start to take advantage of all the benefits of digital assets and just remove the political risk because we're mitigating those now. And I think now we're kind of in an area for explosive growth.
Yes, if you view electronic trading as basically capital markets 2.0, programmable assets, instant settlement, we're really talking about capital markets like 3.0 plus. And so the advantages from an ROI perspective, from a user experience perspective, also from just a financial perspective, from an access perspective in terms of allowing for democratization of access to a lot of products that otherwise a lot of the world would not have access to, is really going to change the landscape of capital markets.
So we're ultimately looking at two systems that previously ran in parallel to regulation, moving towards the convergence of these systems and finding what that functioning looks like. Not to pull away from the optimism of the conversation, but what are some of the key challenges we have yet to address before we really achieve that future?
I still think that, some of the big institutions are a bit slower to integrate. And I think that they have to compete with a lot of internal systems that they've been using for decades. And I think that doesn't necessarily happen super quickly. And look, and the institutions have only been able to really get in the past year or so, maybe even less. So I think there's a little bit of that, making sure that, people take baby steps to kind of understand what the risks are, how to integrate it with their legacy systems, and then going from there. And that's just something that takes time. That's basically a challenge in itself. It's just kind of making sure we educate them, make sure that they, can adapt to using new tools as quickly as they can. I think that's going to be the biggest challenge ahead.
Yes, I think at first it was regulatory. I think we made significant progress there. Now, to Michael's point, I think it's more so interoperability. As these institutions move from like more POC, pilot, very isolated efforts where they've at least been able to now identify the ROI and the value proposition in those environments. Now they're like, how do we actually have this operate at scale? And now it's no longer chain performance that's holding them back as well. Now you have players like Aptos that can support all the credit card transactions in the world on chain as we currently stand. So it's now no longer even a chain performance issue. It's really going to be an interoperability issue. But you are seeing signs of one M&A, where you're seeing regulated businesses, broker dealers, and so forth buying Web3 businesses in order to expedite that learning curve and get the right human capital in place. And you're seeing the opposite direction, where you're seeing Web3 native businesses by regulated businesses in order to offer certain products and establish that connectivity. But it does take time, especially as they try to do it in a compliant manner.
Pace of adoption is something that we're really focusing on. And it's not just the mental leap institutions are taking to want to embed decentralized technology and participate in these systems. It's also their capacity to actually onboard themselves and onboard their systems accordingly.
There's, of course, always a learning curve. Recent as last week, having conversations with a bulge bracket bank, and they were talking about privacy. They didn't realize the scope of confidential transaction, the scope of privacy offerings in which Aptos enables on chain. And so things like that, that just are the reality of their businesses. They'd have to get complete peace of mind as, they meet the expectations of the SEC, CFTC, whichever regulator they're interacting with for a given application.
We've spoken a lot about the opportunities this presents for institutions looking to participate in the broader crypto market, but what opportunities does this announcement actually present for builders within the Aptos ecosystem? And I guess the native builders who are developing these products that they are hoping to onboard institutions to as well.
So the good thing about these products is the introduction of them also attracts a broader set of investors, both retail and institutional. Many of the businesses or the institutions that are looking to basically buy these products, let's say we work with a lot of buy side firms that are looking to put different products on chain, or looking to just engage with Aptos from an investment perspective. It allows those builders to also gain the mind share of those particular investors, which also could be potential partnerships given the strong traction we're getting on the financial services side. So we definitely view this as very complementary from both also a uh, business development perspective, from a origination of partnership perspective for our builders that are looking to interact with larger institutions. Also, from even from a retail perspective, as Aptos awareness and mindshare continues to grow, it presents a great opportunity for them to highlight their business in which they're building and have those investors on the retail side interact with their business, and really gain additional users to whatever application they're building on top of the Aptos blockchain. So we view it as complementary in a number of different capacities, but in any business, you have to have basically an IR effort as well as an underlying business. So we think it's only going to grow the ecosystem.
So basically, growth begets growth in this respect.
That's right.
So we've covered a lot about the opportunities that are arising on every level as regulatory clarity becomes clearer and clearer, as well as the new trading opportunities that are starting to emerge. But when we take a step back, look at the broader landscape, what does success actually look like?
I think from the exchange side, we're kind of like, we create some level of success, but ultimately that is mostly borne by the ecosystem itself. Obviously, because we're just kind of like a piece of infrastructure that for the most part is actually can be invisible to a lot of players, which I think is ultimately the objective. Like if people don't worry about stability, regulation, and kind of market risks associated with the commodity that they're dealing with, that is what success looks like. And I think we're going to be a big part of that. And ultimately, if those things can be mitigated, then the ecosystem growth and us be able to build applications on top of these layer ones is going to be the mark of success.
And then from an Aptos ecosystem perspective, it's multifold, right? So it's one, the growth of this product that we're introducing today from an APT futures perspective, APT ETF approval for Bitwise and other like products being introduced into the market, the growth of the Aptos ecosystem from a builder perspective throughout institutional connectivity. Overall, it's a number of different growth vectors that we're really monitoring on an ongoing basis. But we do think that this is part of that story, and that's going to act as a catalyst for greater adoption.
Amazing. Well, Michael, Solomon, thank you so much for your time today. Obviously, this is all ground in the big announcement of the first ever US regulated APT futures on Bitnomial Exchange. Plenty of other conversations that will be had, but for now, thank you so much for sharing your perspectives.
Really appreciate it. Thanks for the time.
Thanks, Marissa.